Pay me, pay me, pay me my silver now. Pay me or go to jail. Pay me my silver now.
Good morning, Bix Weir, roadrunner.com. Good morning, Hornets. These your sip of chocolate coffee. Oh, so much going on. Silver was getting slammed yesterday. Had a little comeback. It's always fun to watch them let the mouse up a little bit. Same story though. It looks like it's not official yet, and I don't know how big it is, but it looks like BlackRock is going to be the one holding the bag on silver, which is huge. I mean, BlackRock is the backstop of the U.S. government. BlackRock manages the U.S. government's portfolios. So, yeah, if BlackRock goes down, everything goes down. It's even bigger than the banks. So we'll see what happens. They keep shorting into the rise, and the other big banksters are literally closing out their short positions. So I think it's like 55 million. I mean, it's not huge yet, but it will be huge if it keeps going like this, unless they can find somebody else to take the pain. And doesn't look like it. Now, BlackRock could be backed by the U.S. government. Probably is. Whether it is or not, nobody has the physical silver to supply the world over the next 50 years of growth. Nobody. And every projection of every use of silver is massive. Like electric cars, solar panels, those two alone in the next 50 years each claim they're going to use 100% of the silver by 2070. Both of them are going to use 100% of the silver. That means you can't invest in any because it has to go to electric cars and to solar panels. It's the insanity of what's going on right now is just phenomenal. And silver's still trading at less than half of its all-time high from 1980. Now, anybody on the planet, there's no explanation for why this is the case other than silver is manipulated, has been manipulated for over 170 years. They've been holding that beach ball under the water for 170 years, and as soon as it breaks free of the surface of the water, which I think is $50, $50 from the all-time high from 1980, $50 from the all-time high in 2011. Boom! There is nobody who would short into that rise. Not even the U.S. government, and I don't think the U.S. government at this point, the good guys within the government, I think they all, good guys and bad guys, want the system to crash. Obviously, the Democrats do because they have no candidate for the next election. They would love it for the system to crash and blame the bankers. But when the system crashes, not only are they going to blame the bankers, they're going to blame the politicians and the deep state and obviously the global controllers, the WEF, the IMF, the World Bank. No, there'll be no CBDC. They'll get blamed for the problem too. The Federal Reserve will get blamed for the problem, and Treasury, which is where the problem lies squarely on the Fed, the Treasury, the unbacked fiat monetary system, and the global controllers. Not a chance in hell that the World Bank, the IMF, or the World Economic Forum are going to take over. Dick Allgaier is 100% wrong in his analysis that we're not going to be able to break free of these criminals and we're going to be living under their control. Sorry, it's just not going to happen. And when the people wake up in the United States, that's the key. It's when people hear the truth. That we need to tell the truth about what's going on. That there are massive rehab application of U.S. treasuries out there. Like trillions of dollars of treasuries that people own two, three owners of the same U.S. treasury. And that's how the system is run. Same with Apple stock and in all stocks and bonds and commodities, obviously. We're going to get down to what is real and what is not real. And it's going to be shocking to everybody just how rehypothecated the world got. Rehypothecated means several owners of the same asset thinking they're the only owner. Like if you buy a share of Apple stock, you think you're the only one who owns that stock. You don't. There's 5, 10 other people who own the exact same stock, and it's a game of musical chairs as far as the settlement of stocks and bonds and commodities. It's all a con. Massive derivative world, 2.5 quadrillion, I believe now, that will all be destroyed in a blink of an eye. A weapon of mass financial destruction that Warren Buffett called it. And it's true. And what does that mean? As soon as it's triggered, everything gets wiped out. No savings account, no checking account, no 401k, no debt. Your house debt gone. Squatters' rights. And everybody says, well, what happens to apartments? I don't know. Nobody's been through this before. Will any deed or any proof of ownership even matter in that world? Well, the banks never really gave you anything. They created the money out of thin air to lend you your money for your house. And the banks are the ones who are imploding. And I'm going to get to that right now. There's a massive, massive release of information coming on Wednesday. The day before, June 1st, which Yellen says, this could be an X day, the day the US Treasury runs out of money. And this release is the quarterly banking profile from the FDIC. That's right. The FDIC has to release, I think it's at 7:30 in the morning Pacific time, has to release their quarterly banking profile. And in that banking profile, let me show you, this is the one from December where everything was fine and rosy, even though they had this information right on it, right on the banking profile. This is the big stuff right here. Number of assets of banks on the problem bank list. So the FDIC has a very closely held problem bank list. And in that list is the banks that don't perform according to it's some kind of thing called a camel something. That's how they determine who's on it's a formulation of the account, the assets and liabilities and all this stuff. It's the way the FDIC runs their system. Everything is nothing, they can't think out of the box. The FDIC can't think out of the box. You look at these problem bank lists, and there's in December, it went down massively. It went down to less than 100 banks on the problem bank list with less than $100 billion, no, less than $50 billion at risk. Well, wait a minute. If that was as of December 31st, that means that Silicon Valley Bank wasn't even on that list. Signature Bank wasn't on that list. They were all over that threshold, nor was First Republic. So the three big banks that crashed literally a month or 2 months after this was released were not even on the problem banker list. Now they have to release the report for the first quarter. How many are going to be on the problem banking list? My guess is over 1,000 banks. But will they show that? I don't know. They better figure out what they're doing very fast, because they absolutely dropped the ball when it came to Silicon Valley Bank. As a matter of fact, Silicon Valley Bank failed from mismanagement, not loose regulations. If the FDIC cannot figure out why Silicon Valley Bank lost, why people weren't happy with them sitting on massive losses, the FDIC is blaming Silicon Valley Bank management for not hedging the interest rate risk. Well, the FDIC is a regulator. It's not like this is something out of the blue. That is one of the first things they teach you in Banking 101 in college. Why wasn't the FDIC looking at this? Or were they looking at it? And if they were looking at it, they would have seen there's a huge problem. And they would have also seen that they should have been on their own list, their own quarterly list for the problem bank list. This is the FDIC, the entity, the regulator that supposedly guarantees everything under the sun. So they're going to have to revamp their way of thinking, which they're getting called to the mat right now. So yeah, this will be updated for the first quarter. Can you imagine how many banks are going to be on this list? Instantly. Because they're almost every bank had to go to the Fed for bailout in the first quarter. You don't think they're a problem bank list if every bank had to go to the Fed in the first quarter to get more money, to shore up their reserves, because everybody's starting to go to the bank and say, hell, I got to get my money out of the bank, and I can make more money somewhere else anyway. So that's going to be big. And this one, where she blows. Where is it? Anyway, that's what I'm looking for. And also, there is one. The quarterly change in deposits. This is the negative deposits you don't want to see ever. You never want to see negative deposits coming into an FDIC institution because they lend money on the deposits. When it's negative, they got to get rid of assets. And they're all getting rid of the same assets, and the assets are highly underwater. So keep an eye out for this to happen on, 10:30 a.m. Eastern Time on Wednesday. And if they do, they might declare certain banks to be bailed out at that point, and that might be why Janet Yellen said it could be June 1st, because the day before, the FDIC is going to have to release just how bad things are right now. Really exciting stuff, if you ask me. And if you are trying to get your money out of the bank and you're having problems, yeah, the banks can do anything they want. They think it's just their money. Here's an article from a couple weeks ago. Most savings accounts still come with limits on withdrawals, and even after Reg D was lifted. Reg D was a regulation on how many withdrawals you can make. That was lifted by the Fed, but it isn't required to be done by the banks, so they aren't going to do it. If you don't have your money out of the bank by now, you are not going to be able to get your money out of the bank at some point in the very near future. Yes, the stock market keeps going up. Of course it does. All they have to do is click a mouse for the stock market to go up. That's how much control this system is under. And it gets to me what I said yesterday and what I've been saying to the private road. The Office of Comptroller of Currency also knows there's shit coming down the pike really fast. And they know it's about liquidity. They announced just last week updated comptroller's handbooklet and recensions. So this handbooklet made the following changes. They added all these sections. This is a handbooklet for the OCC regulator to go into a bank and say, okay, is this bank going to collapse and we'll have egg on our face, or do they know what they're doing? They added all these new kind of shell game type of liquidity bumpers. They added a reserve balance section, a wholesale funding section, Federal Home Loan Bank borrowing section, a Federal Reserve discount window section, a reciprocal deposits and sweep deposit sections. They're adding all this stuff because they know they're going to have to scramble for liquidity. And let's just look at one of them. This is called reciprocal deposits. This was just added to the handbook, so all the guys know that the shell games actually count. Reciprocal deposits are deposits that the bank receives through a deposit placement network in exchange for placing a matching aggregate amount of deposits with the same maturity at any other member banks in the network. Each bank in the network sets the interest rate to be paid on the entire amount of the funds it places with the network member banks. With a deposit network service such as IntraFi, the member bank can provide its customers with access to FDIC deposit insurance above the deposit insurance limit by splitting the large deposits into smaller deposits, each under the deposit limit, and placing the smaller deposits with the banks in the deposit network. So basically, they're going to take anybody who goes over $250,000. You can place it with one of the bigger banks. You could go $250,000 of your deposits over at JP Morgan, over at Citibank, over at blah, blah, blah. So that you can assure your customers, oh yeah, we are actually, you can leave $1 million in the bank because we do this thing called reciprocal deposits where we'll split it up between the big banks. So you don't have to worry about us, little bank. The big banks are holding that deposit. Basically, it's giving the big banks the deposit because the big banks know these little banks aren't going to survive. What a way to go for the big banks. They're sucking all the deposits out of the system. Reciprocal deposits. And a whole bunch of crap like that. So many shell games going on. Sweep deposits. Sweep deposits are deposits that are swept into the bank from an affiliate or a non-affiliate financial company by a contractual arrangement. just like they said right here, a reciprocal deposit can be swept into the big banks. And all of a sudden it's the big banks' deposit. Because if they go bankrupt or if they miss some financial criteria, it could be in the contract. Boom, it goes right to JP Morgan, right to Citibank, right to Bank of America. This is so insane. It is insane. And, this whole shell game, it was brought to you by this guy, Greg Coleman, the senior deputy comptroller of large bank supervision, Greg Coleman, at the OCC, the Office of Comptroller of Currencies, which also, he's the same guy that hid all the silver derivatives with the gold derivatives. And where did he come from? Let's see. He previously served as director within the Credit and Market Risk Division in the Office of the Chief National Bank Examiner and as the lead for capital markets team at JP Morgan Chase. Greg Coleman, right from JP Morgan, helping him manage the shell game. Insane. We live in an insane world. So yeah, buy your silver, get it in your own possession. I don't know what the last price of silver will be. If it's over $50, they'll just shut down the exchange. If it's under $0, they'll pull the same bullshit that they did with oil and set the price to minus $40 for silver, even though you can't get any. This is the end game. And with the collapse, I would assume they're going to just collapse everything. But yeah, it should be really interesting next Wednesday and Thursday. Wednesday, obviously, the release of the quarterly banking profile from the FDIC. By the way, the FDIC is supposed to be have enough assets to cover, I think it's 1.28% of what they insure, which is ridiculous on the face of it. They don't even have that. They've been under that for a long time now. And this next report will also show that they're way under liquidity, and they need to get they're putting some new assessments on the big banks, but they're going to have to go to Congress and take your money as well because they insure everything. And the whole bailout of the deposits over $250,000 from Silicon Valley Bank and Signature Bank and First Republic Bank, that destroys the FDIC, the need for any FDIC. If the Fed and the US Treasury are going to bail those out, well, the Treasury we know is going to be out of money, so they can't do it. Can the Fed directly bail out the FDIC? I don't know. I don't think so. But hey, it depends if they want to. Remember, this is all being done on purpose. This was all planned. I can't give you the last date. My best guess is the craziness starts this week and ends around September 11th of this year. Just like it did in 2008. September 11th is when $500 billion came out of the money market funds. I don't know. Are they going to do the same thing to teach them a lesson? Or could it happen faster? I don't know. But I know I've been in this game for 23 years, and we've never been closer. Silver has never been closer to breaking 3. By the way, the U.S. Mint still isn't making silver eagles over 900,000 per month. Now that is just shocking. As silver demand goes up everywhere, the U.S. Mint refuses to make silver eagles. Ventris Gibson, the head of the Mint director, needs to be brought in front of Congress instantly and explain to the world why the U.S. Mint, when every other mint on the planet is making record numbers of coins, the U.S. Mint has stopped. Very few of these silver eagles are even getting out to the people. The people in the know, who are the authorized distributors, are probably just hanging on to them. They know something's going on with the U.S. Mint. What could it be? People want to know. Last I heard, the Mint still works for we the people of the United States of America. So you can go, they have all kinds of phone numbers at the U.S. Mint. Give them a call. I've been calling around. They never answer the phone, by the way. Except if you're buying a silver dollar from their site that's marked up 3 times what its melt value is. We are in insane times, my friends. But hey, we knew it was coming. Really interesting. The U.S. military is moving into Peru. You ever think about who makes silver? We know the number one producer of silver is Mexico. Mexico has had their country destroyed because of the low silver price. Mexico could be the richest country in the world because they have the most silver. But there is talk that they're going to shut off silver supply and just hang on to it, as well they should. But the number two player in silver is China, our enemy. They're never going to give us any silver unless it's in a manufactured form. They know what's going on. And number three is Peru. Peru is the number three silver producing country in the world. Why is the U.S. going in there? Probably to secure the silver mines, is my guess. The other countries right here, Mexico, China, Peru, Chile is after that, very close to Peru. Actually, no, it's about half of what Peru does. So Peru is huge. China, we're enemies with China, so it doesn't really matter. Number 5 is Russia. We're not getting that silver. And then there's Poland, who is trying to do everything to help the deep state win in Russia. Who knows what's going on there? Australia, Bolivia, and there's the United States. Because of our regulatory system, the EPA and all that bullshit, the U.S. barely produces any, 1,000 metric tons of metal per year. And it's mostly from other base metal mining operations. It's a byproduct, which is the insanest thing ever. Silver should be the most valuable metal on the planet because it's the most useful metal. And it's not very abundant at all. There's 6 billion ounces of silver on above ground that possibly could come back into the market, including your fillings. And there's 6 billion ounces of gold. Gold's trading at $2,000. Silver's trading at $23.50. The insanity of this game, but the beauty of it, is that you today can get as much silver as you want. Stick it away for many generations to come of your this is your legacy. Uncle Joe was crazy and bought silver when it was under $1,000. He must have been so lucky. No, he bought it at $23 when it goes to $5,000, $10,000. We don't know the fair market value of silver. Nobody does on the planet because it's never been freely traded on an exchange since the 1850s. The Opium Wars. So that's what I got for you. Crazy world, crazy days. I do have my troubled bank list that I put together with a couple internet things, and I think it's a pretty good one. Silicon Valley and Signature Banks are already gone, so there's a few are already gone. But this absolutely 100% will be very interesting to watch the number and assets of the banks on the problem bank list, because I think it is going to bump up tremendously from the under 50 and under 50 billion in assets to, well, if they really counted it properly, it'd be over 4,000, which would be shocking. And then the total assets at risk are, I don't even know, trillions. So that's where we are, my friends. Hey, you want to join the Road to Ruta? Go to roadruta.com, click on subscribe today, and we will send you the coolest coin ever made, the Silver Ruta Lives coin. And you get access to all kinds of interviews and papers and reports and weekly commentary that I can't put out in the public. So go check it out. This is Bix. I'll talk to you later.